The long wait is finally over. After more than a year and a half of negotiations and escalating tariffs, the trade war with China has officially come to an end. And with it comes a commitment from the world's second largest importer to buy an increased amount of U.S. agricultural goods.
Short term, I think the deal is very specific about it. For 2020, the expectation is that China would import $12.5 billion more than the 2017 baseline. And the 2017 baseline, I've seen multiple numbers. Okay, the National Farm Bureau has it at 19.5 billion. So if you add that, you're looking at 32 billion, and China is supposed to strive for another 5 billion. So that's 37 billions in 2020. Okay, and so that's the short term. And for 2021, the numbers are higher. They go up to a total of 44 billion. So it averages to about 40 billion every year of the 2 year of the deal.
Despite the new deal, there hasn't been a drastic change on the commodity prices, as there are still a number of questions to be answered over the coming months.
The administration has individual commodity targets. We are not sure that's value or quantity, but they do have it by soybeans, by cotton, by meat, and so on, but that's not out in the public yet. Okay, so until we see data come out on particular commodities and see some action in terms of imports, volumes, quantities, and values as well, we're probably not going to see a big move in the market.
However, one sector that is extremely optimistic is the poultry industry, as China agreed to lift a more than 5 year ban on U.S. imports.
They removed the restriction that was put in place because of avian influenza, HPAI, back in 2014. So now they are open for the parts of meat that we generally export to China.
So while there is plenty of optimism throughout the ag community, there are still concerns about just how realistic it is for China to reach their import quota.
Anytime two people can sit down and discuss their problems and find a way forward, that's a good thing. So we should be encouraged by that. But the skepticism out there is about the targets and how China is going to meet those targets. And so while we are encouraged, we should also be cautious, look for data as they come out in terms of their purchases. So at the end of the day, is there demand for it? And that's the biggest story. And from what I've checked, prices of some commodities have actually fallen inside China because the demand's weakening, and they're also having a good crop on many cases inside.
And as for enforcement, any conflict will be settled not by a neutral mediator, but instead by the two sides, with an agreement that there will be no retaliations for actions taken.
So that's very interesting, that we cannot solve this dispute, so we are going to put a tariff on you. Okay, you either take the tariff or you walk away from the entire deal. And that is a very unique enforcement arrangement.
Reporting from Athens, I'm Damon Jones for the Farm Monitor.